While being fast-paced, as of 10:58 a.m. Eastern Time, Tilray Brands Inc., trading under the ticker TLRY, is priced at $1.20, showing a modest intraday gain of just over 1%. The stock has been oscillating today between a low of 119 and a high of 124. On the surface, this appears to be just another day of characteristic volatility for a cannabis stock, a slight ripple in a sea of market noise. But to dismiss today's movement as simple sector-driven speculation is to miss the fundamental transformation happening within the company, a pivot so significant that it challenges the very narrative most investors have built around this stock. The common expectation is that Tilray is a waiting game, a long-term hold entirely contingent on the political whims of Washington, D.C., and the eventual federal legalization of cannabis in the United States. Many traders, using platforms from Fidelity Investments to Robinhood, are holding shares of Tilray stock with this single binary outcome in mind. The reality, however, is far more complex and is unfolding in the company's financial statements and strategic acquisitions right now, independent of any legislative action. The real story of Tilray is no longer just about cannabis. It's about a deliberate and aggressive shift into the consumer packaged goods space, particularly craft beverages, and whether this strategic diversification can build a profitable company before the cannabis dream is ever fully realized. This shift creates a fascinating tension, a push and pull between a future promise and a present, tangible business operation that carries its own unique set of massive opportunities and significant risks. Let's dissect the recent trading activity to understand the market's current sentiment. Today's volume, while still substantial, is trading below its recent daily averages. This can be interpreted in a couple of ways. On one hand, it could suggest a consolidation phase, where the stock is building a new base of support after a period of significant price swings. On the other, it might indicate a waning of speculative interest as the market waits for a more concrete catalyst. Many self-investing individuals, perhaps using SoFi Invest or managing their own individual brokerage accounts, see this lower volume as a moment of calm, a chance to accumulate a position. However, institutional investors, those trading through sophisticated platforms like Interactive Brokers, are likely scrutinizing the cash flow statements more than the political headlines. They are analyzing the costs associated with integrating major acquisitions like Sweetwater Brewing, Montauk Brewing Company, and others. The expectation is that these purchases immediately bolster the bottom line, but the reality involves hefty integration costs, marketing spent in a fiercely competitive alcohol market, and the challenge of achieving meaningful synergies. The recent price action reflects this uncertainty. The stock struggles to hold gains above the 125 mark, suggesting a wall of sellers who are perhaps losing patience with the long-term story and are more focused on the persistent lack of profitability. Many investors look at the broader cannabis sector, comparing Tilray to its peers, and see a sea of red ink. The question they are asking is not if cannabis will be legal, but which companies will have the financial strength to survive until then. This is where Tilray's management has made a clear strategic bet. Instead of solely focusing on being the biggest cannabis operator in waiting, they have used their capital to purchase revenue-generating and, in some cases, profitable beverage brands. This is a direct attempt to insulate the company from the volatility of the cannabis market and the painfully slow progress of U.S. federal reform. The expectation among bullish investors is that this creates a two-pronged growth engine. The reality, however, is that it also creates a multi-front war. Tilray is now competing not just with other Canadian cannabis giants and emerging U.S. multi-state operators, but also with established giants in the craft beer and spirits industry. This is a critical distinction that many retail investors fail to fully appreciate. They might see the addition of these brands as purely additive, without considering the capital expenditure, marketing budgets, and distribution logistics required to maintain and grow market share in these saturated sectors. When you open your Fidelity mobile app or your Robinhood stock trading interface and see Tilray stock, you are no longer just looking at a cannabis company. You are looking at a diversified consumer brands company that is trying to prove its concept. The success of this strategy is paramount. If Tilray can demonstrate strong, consistent growth from its beverage division, it completely changes the valuation thesis. It provides a floor for the stock, a tangible asset base that is not dependent on a legislative vote. This is the story that the numbers will eventually have to tell, a story far more nuanced than a simple up or down vote on cannabis reform. To provide some essential background, Tilray Brands operates globally with a portfolio that spans cannabis and consumer goods. Its cannabis operations include medical cannabis in numerous countries, with a particularly strong foothold in Germany, and adult-use cannabis in Canada. The company was formed through a major merger, which promised significant cost savings and a dominant market position. However, the Canadian cannabis market has been fraught with challenges, including oversupply, pricing pressure, and a resilient illicit market. This has made profitability elusive. Past earnings reports have consistently shown revenue growth, which is often what gets highlighted in press releases, but a deeper look reveals significant net losses. This history of burning through cash is a major reason for the stock's long-term decline from its post-IPO highs. Management's pivot toward beverage and wellness brands is a direct response to this reality. They understood that waiting for the Canadian market to mature or for U.S. legalization to occur was not a sustainable business plan. They needed cash flow, and they needed it from established, federally legal markets. This is why when you are considering an online investment in a company like Tilray, you cannot simply look at the potential size of the U.S. cannabis market. You must also analyze the performance of its beer brands, its energy drinks, and its CBD products. You have to ask if the company is executing on its diversification strategy effectively. For those using tools like Schwab investment portfolios or other automated investing sites, which often rely on broad market ETFs, a single stock like Tilray represents a concentrated bet that requires this deeper level of due diligence. Looking toward the future, the outlook for Tilray is defined by several key potential scenarios and catalysts. The most obvious and talked about catalyst remains any form of U.S. federal cannabis reform. The SAFE Banking Act, which would grant cannabis companies access to traditional banking services, would be a major operational improvement. Full rescheduling or descheduling of cannabis from the Controlled Substances Act would of course be the ultimate prize, opening the floodgates to the world's largest consumer market. This remains the primary expectation of a large portion of the shareholder base. However, the reality is that the timeline for such reform is completely uncertain. A more immediate and controllable catalyst lies in the performance of Tilray's existing business units. A strong earnings report that shows significant growth and, more importantly, margin improvement in the beverage alcohol segment would send a powerful signal to the market. It would prove that the diversification strategy is not just a defensive move, but a viable path to profitability in its own right. Another key area to watch is international expansion, particularly in Europe. Germany's move toward broader medical access and potential recreational legalization presents a substantial opportunity where Tilray already has established operations. However, the risks are just as significant. The primary risk remains the company's cash burn and its path to sustained profitability. Without a clear line of sight to positive net income, the company may need to raise additional capital, which could lead to further share dilution and pressure on the stock price. Competition is another major risk factor. Should the U.S. market open, Tilray will face off against well-entrenched American companies that have been operating in state legal markets for years. These companies have established brands, distribution networks, and a deep understanding of the American consumer. In the beverage space, the competition is even more intense, with countless brands vying for shelf space and consumer attention. Do you think the government will pass legislation in favor of the cannabis industry anytime soon? Comment below with your thoughts on the timeline. This political uncertainty is a constant overhang, forcing investors who use platforms from Fidelity Wealth Management to SoFi Active Investing to weigh the immense potential against the very real possibility of continued delays. The interplay between these catalysts and risks is what will determine the trajectory of Tilray stock, far more than the daily noise of minor price swings. To conclude, the narrative surrounding Tilray brands is at a critical inflection point. The market expectation is largely fixated on a single event, U.S. federal legalization. This view frames the stock as a speculative, almost lottery ticket-like bet on a political outcome. The reality of the situation is that Tilray's management is actively trying to rewrite this narrative in real time. They are building a diversified consumer packaged goods company with a significant and growing presence in the craft beverage industry. This strategy is an attempt to build a fundamentally sound business that can thrive even without immediate federal cannabis reform. The success or failure of this ambitious pivot is the real story that investors should be watching. The daily stock chart reflects the market's deep ambivalence, its excitement about the long-term potential of cannabis clashing with the harsh reality of current financial losses and the immense challenges of executing a complex multi-industry growth strategy. Understanding this tension between the popular expectation and the underlying operational reality is the key to making an informed decision about Tilray, whether you are a seasoned trader on Interactive Brokers or a new investor setting up your first account. The company is no longer a pure-play cannabis story.